Hi everyone. So welcome back to our audit session and today's topic is risk of material misstatement assessment. So we will be assessing the RMM in today's session. The auditor should identify the risk while understanding the entity and its environment, including the internal control. So it's the prime duty of the auditor to understand the entity, environment, and its internal control. So the auditor should assess the identified risk and evaluate whether they relate more pervasively to the financial statement as a whole or potentially affect certain assertions. So auditor should evaluate if it is affecting entire financial statement or certain assertions only. Also, auditor should relate the identified risks to what can go wrong at the relevant assertion level, taking the account of the relevant internal control that auditor intends to test. So here auditor should be of mindset to understand that what could go wrong in this scenario if the internal control is weak. So what are the chances of having the misstatement, what are the chances of having error if the controls are weak, and what could go wrong in that case. After that, auditors should consider the likelihood of potential misstatements and whether these are of magnitude that could result in the material misstatement. So, auditors should identify the potentiality of having misstatement and magnitude, its size, that it can its impact will be material or immaterial. Auditors should also determine if any identified risk are significant risk and requires special audit consideration. So auditor should be of professional skepticism, and auditor should evaluate through the overall audit response that if certain areas have the specific significant risk and that requires the special audit consideration, that requires specific attention of the auditors or not. Few of the examples are risk of the fraud or complex transactions, related party transactions, or unusual transactions. All these are the probability of having significant risk and requires the special attention of the auditors. Also, one point to be noted here is that not all the high risk are significant risk. It is not necessary that all the risk which have the higher probability needs to be the significant risk. It is not a mandatory thing. For example, if the collectability of the account receivable may be the high risk but not significant risk. Okay, yeah, that's a normal. The collection seems to be the high risk, but it is not the significant risk for the entity. So here, no special audit consideration is required, and normal audit procedure is sufficient in this scenario. Auditors would also provide the basis for designing and performing the further audit procedures. So obviously, after the understanding the entity and its environment, auditors should provide the basis of how they are going to perform the further audit procedure. What are the design and performance structure that they are going to apply in the further audit procedures. So at the financial levels and the relevant assertion level, so both should be kept in the mind. So at the financial level, few of the examples are risk relating to the regulatory environment which clients operates. If the possible risk that exists at the financial statement level should be related to specific assertions or not. So in auditor's response, in addition to developing the assertion specific response, this risk may require the auditor to develop the overall response. So depending upon the circumstances, this risk and its assessment works. For the relevant assertion level for the class of the transactions, balance and disclosures, risk related to the valuation of the inventory is restricted to the account and assertions and the related determination of the cost of sales. Yes, this is one of the example. Also, though the auditor expresses an opinion on the financial statement as a whole, the auditor applies the audit risk model and assesses at the assertion level. So, though they provide opinion on the financial statement as a whole, but the auditor should gain comfort over all the assertions level as well. It's not only the overall financial statement level that audit is done, but at all the transaction balances and disclosures level also the audit is done. Also, in the auditor's response, these risks should be considered when designing the nature, extent, and timing of the subsequent further audit procedure. So while identifying the risk, the nature, extent, and timing can be determined and should be determined for the further audit procedures. What are the plans, what are the expected timings to complete the audit? So this should be determined at the time of RMM assessment only. Also, auditor may use two approaches: substantive approach and or combined approach. So in the substantive approach, auditor performs only substantive test and no control testing is required in the substantive approach. So if internal control appears to be the non-existence, inadequate or ineffective, or auditor believes that test of controls will be inefficient, in this case, auditor can only use the substantive approach. In combined approach, auditor needs to perform both test of the controls and substantive test. Here, auditors RMM assessment include an exception that internal control are effective. That is, auditor intends to rely on the internal control to design the nature, extent, and timing of the substantive audit procedures, or substantive tests alone are not sufficient because of certain IT environment or any circumstances. So in this case, combined approach is performed by the auditor. So both the options are there depending upon the circumstances and depending upon the effectiveness of the internal control. If it's ineffective, then only substantive approach is required, but it is effective, then combined approach is required. Also, one point to be noted here is that auditor's assessment of RMM may change during the course of the audit as the additional audit evidence obtained. So, RMM assessment is the iterative process and is done throughout the audit. At some point, if auditor feels or comes to know that the certain areas has higher risk, then auditor may increase his nature, extent, and timing of the audit procedures. Whereas in certain scenarios, if auditor gets comfort at the substantive approach, at the limited substantive approach, auditor can can gain a comfort over there and change their NET, that is nature, extent, and timing of the audit approach. So it is an iterative process, and auditor should be skeptical throughout the audit to understand and to navigate and to develop and change the RMM that has been developed initially during the planning phase. So that was all about the RMM assessment here. Uh, Thank you for staying connected. Let me know if you have any queries. Let me know in the comment section. I will there reach out to you for your help. Bye.